Hey everyone, welcome back to Corporate Decoder. Today, AB Institutional Funds Incorporated's latest N-CSRS filing just dropped, and I am seeing some interesting things in their real estate venture, AB Global Real Estate Investment Fund, the SURI. Quick note, this is not financial advice, just my take on public filings for educational purposes. This report gives us a snapshot of how this fund performed in the first half of 2026, and the numbers reveal a heavy concentration in real estate, but also some smart moves with currency. So what exactly are we looking at here? This filing is essentially a shareholder report. It tells us where the fund invested its money, how much it is worth, and how it performed over a specific period. This particular report covers the 6 months leading up to the 30th of April 2026 for AB Global Real Estate Investment Fund IT. This is a semi-annual report, meaning it comes out twice a year. It gives us crucial information about the fund's financial health and investment strategy. Think of it as a regular checkup for the fund's performance. Let's dive into the key numbers. The fund's net assets stood at a solid $189,293,556 as of the 30th of April. 2026, that is the total value of everything the fund owns, minus any debts. It is a healthy number, suggesting a substantial investment pool. The fund held 90 different investments or portfolio holdings. This diversification is generally a good sign, spreading risk across various assets. The portfolio turnover rate was 21%. This means about 21% of the fund's holdings were bought and sold during this period. A lower turnover rate often suggests a more long-term investment strategy, which can be good for a real estate fund. Interestingly, the total advisory fees paid came in at $500,231. This is the money paid to AllianceBernstein LP, the company managing the fund, for their expertise and services. We'll look closer at how this fee compares to the fund's performance later. Now, let's talk about where this money is actually going. The fund invests heavily in real estate, which makes sense given its name. The top holdings are dominated by major players in the real estate sector. Coming in at number 1 is Welltower Incorporated, valued at over $13 million, making up 7.4% of the net assets. Prologis Incorporated is second, with a value of over $12 million, representing 6.7% of the portfolio. Equinix Incorporated follows, valued at almost $10 million or 5.1% of net assets. Digital Realty Trust Incorporated is also a significant holding worth over $8 million, about 4.3% of the total. Simon Property Group Incorporated rounds out the top 5, valued at nearly $7 million or 3.6% of net assets. Then we see Extra Space Storage Incorporated, mid. America Apartment Communities Incorporated, Vici Properties Incorporated, Goodman Group, and Brixmor Property Group Incorporated. Together, these top 10 holdings account for a substantial 38.5% of the fund's net assets. This level of concentration in a few large companies can amplify both gains and losses. Geographically, the United States is the dominant market, accounting for 63.6% of the net assets. This is followed by Japan at 9.3%, Australia at 5.7%, and Hong Kong at 3.5%. The United Kingdom, Singapore, Canada, Switzerland, France, and Germany also represent smaller portions of the portfolio. This international diversification is good, but the heavy US weighting means the fund's performance will be closely tied to the American real estate market. Looking at the sectors, the fund is heavily invested in equity real estate investment trusts, or REITs, making up a massive 80.9% of the net assets. Another 16.1% is in real estate management and development. Healthcare equipment and services and materials make up smaller portions. This strong focus on REITs means the fund is directly exposed to the ups and downs of the real estate investment trust market. Digging deeper into the actual investments, we see a broad range of real estate properties. For instance, within the equity real estate investment trust category, under data center REITs, we see Digital Realty Trust Incorporated with 40,939 shares valued at over $8 million, and Equinix Incorporated with 8,957 shares valued at over $9 million. Under diversified REITs, there are holdings like British Land Company PLC, Broadstone Net Lease Incorporated, and Capitaland Integrated Commercial Trust. This shows the fund is not just betting on one type of real estate, but spreading its bets across different property types and geographies. The healthcare REIT sector is also significantly represented, with companies like Edifica SAR, Alexandria Real Estate Equities Incorporated, and American Healthcare REIT Incorporated. This diversification into healthcare real estate could offer a more stable revenue stream, as healthcare demand is often less sensitive to economic cycles. Industrial REITs are another major segment, including holdings like Americold Realty Trust Incorporated, Capitaland Ascenders REIT, and Goodman Group. These investments are likely tied to logistics, warehousing, and manufacturing facilities, sectors that have seen significant growth. Multifamily residential REITs are also a key focus, with companies like Mid-America Apartment Communities Incorporated and UDR Incorporated. This sector is usually quite stable as housing is a fundamental need. The retail REIT segment includes names like Acadia Realty Trust, Brooksma Property Group Incorporated, and Simon Property Group Incorporated. This sector is particularly interesting given the ongoing shifts in retail shopping habits. Self-storage REITs like CubeSmart and Extra Space Storage Incorporated offer another layer of diversification, often performing well during economic uncertainties as people downsize or relocate. Beyond direct REIT investments, the fund also has significant exposure to real estate management and development, with holdings in companies like City Developments Limited, Mitsubishi Estate Company Limited, and Mitsui Fudosan Company Limited. This suggests the fund isn't just passively holding properties, but is also involved in the active management and development of real estate assets. This can offer higher return potential, but also comes with greater risk. Now, for something that adds a sophisticated layer, the fund is actively using currency exchange contracts. This is a way to manage risk related to fluctuations in foreign currencies. For example, they have contracts with Morgan Stanley and Company Incorporated to exchange US dollars for Japanese yen, and with Barclays Capital Incorporated to do the reverse. These contracts show the fund is not just investing in real estate, but is also strategically hedging its currency exposure, which is a smart move in a global market. They have a net unrealized appreciation of over $11,000 on these contracts at the end of the period, indicating these hedges have been working in their favor. Looking at the statement of assets and liabilities, we see the fund's total assets are over $190 million. Liabilities are around $845,000, which is quite small compared to assets, indicating a strong balance sheet. The net assets, as mentioned, are about $189 million. For Class I shareholders, the net asset value per S-share is $11.58. This is the real value of each share of the fund. The statement of operations shows us the fund's profitability for the period. Investment income was over $3.2 million, mainly from dividends. Expenses were around $714,000, a manageable amount. The net investment income was about $2.5 million. What's really interesting here is the net realized gain on investment transactions, which was almost $1.8 million. Coupled with a net change in unrealized appreciation on investments of over $13 million, the fund saw a total gain of over $15 million from its investments. This means the fund's assets grew significantly in value during the 6-month period. The statement of changes in net assets shows a net increase of over $10 million for the 6 months ending the 30th of April, 2026. This is a positive overall increase in the fund's value. Now, let's look at the financial highlights for a Class I share. The total investment return for this period was 10.38%. This is a pretty strong return for just 6 months, especially when you consider the market conditions that can impact real estate. The expense ratio, net of waivers and reimbursements, is 0.78%. This is a reasonable expense ratio for an actively managed real estate fund, especially considering the advisory fees and other operational costs involved in managing a diverse portfolio. The notes to the financial statements provide important context. Under Note A concerning security valuation, they explain how they determine the value of their investments. They use market quotations when available, and for less liquid or unquoted securities, they use fair value determined by management. This fair value process is crucial for accurately assessing the value of real estate assets. Note B details the advisory fee. The fund pays AllianceBernstein LP an advisory fee based on a percentage of assets under management with a tiered structure that decreases as assets grow. This is pretty standard practice. They also mention reimbursements for legal and accounting services, which is also normal for mutual funds. An interesting aspect is Note D on securities lending. The fund can lend out its securities to generate additional income. They mention they receive collateral, usually cash or US government securities, to secure these loans. This is a way to boost returns, but it also comes with its own set of risks, like the borrower defaulting. The report shows they had over $18 million in securities on loan, generating over $12,000 in income from borrowers. Finally, the risk section is always critical. They highlight market risk, which is pretty much the risk that the market will go down. Real estate risk is a big one, as the value of properties can decline. Foreign risk is also mentioned given their international holdings. They also talk about interest rate fluctuations, credit risk if an issuer can't pay, and currency risk because they invest globally. Derivatives risk is also outlined, noting that these complex instruments can be hard to price and can lead to significant losses. So, what is the takeaway here? AbbVie Global Real Estate Investment Fund IC seems to be a well-diversified real estate fund with a strong focus on REITs and a significant presence in the US market. They are actively managing their currency exposure through forward contracts, which has been beneficial. The fund has delivered solid returns in the recent period, and its leverage appears to be managed responsibly with a strong balance sheet and manageable expenses. However, as with any real estate investment, it is exposed to market fluctuations, interest rate changes, and the specific risks associated with the real estate sector. The heavy concentration in top holdings could amplify volatility. The fund's strategy of combining direct real estate investments with sophisticated currency hedging shows a mature approach to investment management. The consistent performance and prudent risk management suggest this fund is designed for investors looking for dedicated exposure to the global real estate market. The risk I am watching is how well they navigate potential downturns in the global real estate market, especially with their heavy US concentration, and how their currency strategies perform under stress. What I'm actually looking for is how they plan to diversify further and manage the concentration risk in their top holdings. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. Like, comment, subscribe, and join our Discord community for more deep dives.